Welcome to the Wisdom Club podcast, where we talk to inspirational business leaders in our community that inspire us to lead a life full of wisdom and build a business as worthy of our wildest dreams. I'm your host, Leo Chen. I'm a tech entrepreneur, real estate advisor, and investor located right here in sunny coastal Orange County, California. And the goal of this podcast is to expand your mind and share what's possible. Today, I'm excited to share a great conversation I had with my good friend Radhi Shah. Radhi Shah is an amazing real estate entrepreneur based out of the Dallas metro area. Over the years, we've gotten to know each other as she's part of my advisory support group. What I love about this conversation is the tremendous knowledge that she shared regarding real estate investing that I believe anyone can achieve. She breaks down the step-by-step and how you can expect to earn with a little bit of money and how to multiply that over time. This is the foundation of how the wealthy invests. And it starts right now. Welcome to Live with Leo at 5. So without further ado, though, I've got Radhi Shah here. Radhi, say hi to everybody.
Hi, Leo. Hi, everybody. Happy to be here on this Friday.
Thank you. I've been waiting for this for quite a while. I love having you on the show today, and I love just being around you all the time because we are in a few mastermind groups, and where we're constantly learning, so we're constantly interacting and learning to be better and better business owners, but better entrepreneurial people, as well as social media, trying to get in front of people to share our message, share our services. So for the audience out there, can you tell everybody where you're from, what you do, and how you got into the business, and just a general overview?
So first, let me tell you, Leo, you are an inspiration to me, really. And I learn a lot from you also, and enjoy the camaraderie that we have. Hi, everyone. I am Radhi Shah, and I'm based in Dallas, Texas, city of Plano. It's a suburb of Dallas. And I've been a realtor for 20 years. And I got into it by chance, actually. I was helping my friends buy, and I have a design background. So I love homes and architecture and just anything to do with design. And so I started helping my friends, and one of them said, you should be doing this for a living. And I was a homemaker at that time. My degree is in fashion design, and I went to school in New York, worked there for a few years, and then life took over, and then I got into real estate. And once I did, I really learned that I'm really good at marketing, and that's and I just love homes, so enjoy serving my clients.
And so what you found out was that you really love marketing the homes, and which in turn, of course, helping people sell their homes, because that's one of our big jobs as realtors, is to get your home in front of people. And the better you're able to do that, and better you can sell the home, meaning not sell the home like, hey, we want to buy it and all that stuff, but sell the home as in like, hey, these are what's the highlights and what's great about this home. Is this something that matches what you're looking for? Let's get you in here and let me answer all your questions, right?
Right. Selling is an art and not a science. And people forget that, So when you reach people's hearts and emotions, and you help them connect with the home that they love, I think ultimately everybody knows what they want, but you just have to guide them. So I just enjoy that process.
Yeah, I know. I'm glad that you brought that up, because every time I think about it, when I find the right home for somebody, and you tell me like this happens to you too. I find the right home, I go into escrow, and I kind of coordinate everything, answer all the questions along the way, because of course they don't ask those questions before all that happens. Everything happens, as the question starts to come on, and sometimes in a very short period of time. I'm in a 21-day escrow right now, and we're compressing everything, and so everything speeds up. And not only that, they're first-time home buyers, And so things tend to go really fast. But when they get the keys and they're ready to move in, like you see their faces and you see their happiness and all that stuff. So, so many people say, hey, my mind is blown because I learned this or I did that. But in this case, what we do, people's heart is blown. Like, oh my gosh, like I blow up, right? There's another way to, look at that because it's so emotional, so personal. Right. So I think all the realtors now, we just appreciate what they do for people because you honestly don't know all the work that goes into it as much as we try to show them. But at the end, the reward is this blown heart is what we're looking for, right? That's right. The clients are clients for life, and they're so grateful in general because we really help them achieve their dreams. So it's just, you get a lot of joy from that. Yeah, and on top of that, you have a design background, so I'm sure you can also offer, a lot of expertise and a lot of advice that goes really, really a long way because they need that because not everybody knows, what the design factors are and stuff like that. Absolutely. Okay, so I know we got a lot to get to today, and I want to get to some money stuff and some investment stuff. And I know you have a slideshow to show us. So would you like to kind of fire that up, and then we can go from there? Okay, I'm going to share my screen. Let me give you quick permission here. Hold on. Okay, you should be good. Okay, so can you see it, Leo? I cannot. You have the right screen there? Yes. Okay, how about now? And yet. Oh, there. Oh, okay. Now, better? Yeah, perfect. Okay. So, I wanted to share, Leo, with your audience about how I started investing in real estate and why, first one should invest in real estate. It is an excellent way to diversify your assets and investments. And for us realtors, I mean, a lot of realtors buy what they know. So it's something that we know. This is one thing that pays us to own it, where you get a loan and a tenant comes in and lives in it, and they pay us to own it. So they pay our monthly expenses. And so all we need is the minimum down payment to invest and start that. And I don't think there's any other asset where you can build it this way. So basically, So for us realtors, we can even have our commission, but I know a lot of people are not realtors on your show. So it's a great way to generate passive income for retirement. That's the reason I'm investing, because I want the properties I buy to be paid off so that when I'm retired, I just get the passive income. I mean, there's nothing like a paid off investment that just keeps giving and giving and giving. And again, as I said, to diversify. So those are some of the reasons, but there is an amazing tool called 1031 exchange, which is named after the section 1031 of the U.S. Internal Revenue Code. And what that helps us do and achieve is it defers taxes, defers capital gains. So let me know if I'm getting too detailed, but the key is we own a property. When we sell it, we pay usually 20% capital gains. And if we exchange it with like-kind exchange, that means if you buy a home, sell it, and then whatever the proceeds from it, the profit that you make, you put it directly into another home with some criteria,
and you don't pay taxes. And that can continue on and on and on. So a lot of people start with a small little property, and then it can just keep growing into a huge, 5-building apartment complex or something like that. It just keeps rolling, and you ultimately pay taxes if you sell it as an owner. But it's a great legacy building tool, because when we pass that on to our kids, and after we obviously die, then they don't pay any tax at all. So that's the hidden advantage of 1031 exchange. So for me, all I want to do is accumulate the assets and then give it to my kids later on. I mean, whatever I keep for myself, I will. But if I give them a few assets, there's nothing like that available, and we've saved a tremendous amount of cash and value by saving capital gains taxes.
Right. So let me go over that real quick, just to reiterate. So when you buy a home and you sell it, and if you want to sell it and take the money out to go do something, you get taxed. Okay. Right. But if you want to use real estate as an investment strategy, then instead of selling it and get taxed, you can sell it and go buy another property with your proceeds. And with that, you won't get taxed. And so that's what this 1031 exchange basically is. And so you can keep doing that over and over and over. And one of the things you have to keep in mind is when you buy a home, let's just say you buy a home for $100,000, just for easy numbers. You buy a home for $100,000, instead of selling it and get taxed the 20% that you paid into it, you can go ahead and buy something else and take that $100,000 and invest in something bigger. Could be, say, a $200,000 home. And then you basically keep upgrading without having to sell and buy and sell and buy and pay taxes and buy and then pay taxes and buy. So you can continue to build that. And what you're saying is, this could be a strategy where you are giving inheritance to your kids, because there's a tax code that says that if you are giving this to your kids as an inheritance, when your kids go to sell it, they won't pay any taxes, because it's something that was left as an inheritance from you.
Yes, the basis, which is, so let's say you buy a $100,000 home, and then it grows and grows into $1 million asset. Normally, if in a normal condition, the tax is calculated on the basis, which is anything above 100,000 is taxed. Right on, so 900,000 in a layperson's term. Okay, this 900,000 would be taxed at a certain point when you sell it. However, if you leave it as an inheritance for your kids, then the basis, that means the base value becomes $1 million. So there's no gain in the eyes of the tax gods, I guess. So there's no tax on it, and that is impossible to achieve anywhere else.
Right. So that's what's amazing about investing in real estate, right? We have tax write-off for one, with your interest and property tax, but then we also, have this mechanism where it allows you to not be taxed, so that you can exchange properties, or you can give it to your kids as an inheritance and they won't get taxed. So huge tax advantages, because it could be, the taxes could be so high, like you were saying, it could be worth $1 million and you could be taxed 20% on that. That's $200,000 right there.
Right.
So, okay. So I think we're clear on that, and we can move forward.
So I have an example, which is my example of how I grew $50,000 of initial investment to $296,000 in 10 years. Looking at the numbers, I'm in awe myself. It's like, how did we achieve this? But when you look at the math, it's pretty simple. This, after a certain expense, it actually comes down to, I may have duplicated a certain amount here, so it may be 246. If I take 50,000 off, it still is 5 times the growth. So I invested 50,000 in a townhome that I purchased at 228,000. Texas is still affordable. For 7 years, I kept it, and people were renting it. After 7 years, I decided to sell it, and I purchased 2 properties from the proceeds. So my proceeds, 50,000, my original investment grew to 112,000, and that 112,000 is what I got at closing. And that was put into a 1031 exchange account at the title company. And from that amount, I split the 112,000 into 2, and I bought 2 homes. One was 225,000 and another was 235,000. What I want you to see is that this is just my math, but it's the process of using the money that we got is what you should concentrate on, not the numbers really. So from 1 home, sold it, I bought 2 homes. And after the purchase price was 460,000, so I literally doubled the asset value at that point.
Now I want to pause for just a moment here, just so people understand here. What's incredible about this is that she put in $50,000, all right, and she did not put any more money into it. There was no additional investment into that. She turned that $50,000 into $112,000 because the appreciation over the 7 years. She took that $112,000, she split it up and used that money to buy 2 homes and put down payment on both of those single family homes, one at 225 and one at 235. So the total purchase price was 460. So basically, if we roll back in time, she had invested $50,000 to basically now buying $460,000 worth of real estate assets.
Right. So where is the gain, and how do I calculate how the $50,000 grew? One is the market value increased by 60,000 today. So after I purchased the 2 properties, that was about 4 years back. So today's value has grown by 60,000. So that's one gain. The profit from the rent each month, I was making about $400 per home each month. And that added over 3 years was about almost $30,000 in profit. I saved 20% capital gains on the original, the 112,000. So I included 12,000 there. That's another profit. And then when the tenant pays the rent, all the money that they pay for the rent goes towards the mortgage. So when we put that towards the mortgage, the principal is being paid each month of the loan by the tenant. And that added up over time, and the equity that I have built today in both the properties totals to almost 200,000. So when I add all the amounts, it comes to 296,000.
So that's your gain. That's your gain over time, right? And over how much amount of time you said?
Well, this includes 50,000 of the original investment. That's why I was saying it's duplication. So even if we take the 50,000 original investment out, it'll be 40, right? 246,000 is the growth, the gain.
Right. So total ROI 493%. So just to review a little bit in case you missed that, okay? The first thing here is that there's an increase in market value, means the home will have gone up over time. Okay, and then the second part there is the profit from rent. So that's the additional amount that you gained when your tenant paid you a monthly rental. And then you added that up over 3 years, and it looks like you gained roughly just under $10,000 a year over 3 years to a total $29,016. And then because you own real estate, you have the you save the 20% capital gains tax on the original sale, $12,400, and then the total equity that was built over time as homes became more valuable was $195,224 from the original time of $50,000 investment 7 years ago.
That's right.
Okay, good. I hope that helps. I know that we can go kind of a little fast, and for those people who have never done this kind of math before, I like to just make sure I kind of go over it so that people can truly understand the value, of what's going on here. And Radhi here has laid this out so beautifully, and so that you can see, at the bottom, the total amount of profit. And her now, it says total investment and profit, and she only invested $50 to get $296,640, and so that's where you're getting the 493% total return of the investment. So thank you so much. This is so great. So I'll let you continue.
I wanted to point out that this is simple math, and it's I'm not a mathematician, and an accountant may look at this and change the number slightly, and my ROI will go down, my return on investment may go down. But it takes 7 years to double the money when you invest it. Usually, that's a general rule. And so even if it's 250% or 300%, that's a huge increase. So I just want people to not get bogged down with the numbers and the math. It is more about the fact that originally only $50,000 was invested.
Right.
And I have not put in anything more over time,
And then the other thing is, you can take that, go back to your slide. You can take these current 2 single family homes. You could also exchange it again, and you could possibly have 4 homes, and you could do again what you did with the first one. So 1 home turned into 2 properties, two homes, and then you can turn these 2 homes into 4 homes.
It could, and it can even be a commercial investment. You can do a strip mall or a apartment complex. You can really go, as long as it's land, it could be anything.
Right. Okay, cool.
So I wanted I learned some key lessons because that I want to share with somebody who's never done this before. It all looks good on paper, but when it comes time to invest in taking that first step, even though I've been selling real estate for 20 years, I have learned some lessons I want to share that start today. Time is our biggest friend because it takes time to build build value, right? It doesn't happen overnight. And think big picture. Instead of focusing on monthly profits, I sometimes have clients who get too stuck on, I'm not making any money. But yes, over time, the value will increase and you'll get the return because the market keeps changing. Buying a house, paying a little over asking for the right home is nothing compared to the long-term return on the right property. So it's just not always what is a deal. It's not always getting a big, huge break on a property. It's the location. It's finding the right home. And the first investment purchase is the hardest to buy. Once you buy that and you go through the process and you start seeing the money coming in for the rent, and you know that, somebody's going to rent it, then usually people say, okay, let's now I can save 50,000 here and 30,000 there. Let me buy another and another and another. But the first one is the hardest to make. And the my philosophy is the lower price in the rent, the lowest, and that's why I stick to the 250 plus minus, even though that's getting a little harder. That's the most stable market because there are more people who want to rent in that kind of price point. So they pay $1,800, $1,900. Now, California, I don't know if you even see those numbers, but in Dallas area, we can still have good access, to those homes. So slow and steady wins the race, really. Just start the process. It's all about that.
In California here, sorry, I just want to insert here real quick. In California here, I know a lot of people here are locally to me that are watching and everything. California here, you can buy a condo. You can buy a condo for probably $350 to $400. A nice, decent condo could be a 2-bedroom, sometimes 3-bedroom for a small family or people who are starting out or something like that. And those rent for really well for that price point. Some of the homes, if you buy them for $500,000-$600,000, you're not getting that much more rent. So the lower that you can buy it for, the better. And anything that's 2 bedrooms or more, it's perfect because there's a lot of renters who are just looking for 2 bedrooms and they need to rent. They need to have a place to live. They can't afford to buy. And so you're going to get so many people applying to rent your property because that's where the sweet spot is. Basically what Radhi is saying, that's the hottest rental market. So if you can do something like that, you can qualify for something around $350,000. Here in California, you can get really good rent, and then in no time, think about what we always say to ourselves. We always say, hey, oh my God, I can't believe the times flew by so fast. Look, I can't believe it's June already. I thought it was January. Can you imagine that, you wake up one day and 7 years later and you just made yourself, whatever, $150,000 or $200,000. Here the prices are higher, so you actually earn more. Your appreciation is higher. So you wake up one day. Even if let's say you earn, $250,000 in 5 years, that's $50,000 a year, right? For doing nothing, for sitting back and collecting rent. So it's very, very powerful, and time is definitely our friend, as Radhi says. So, just do not overanalyze and have procrastination on doing this because real estate has been stable. Everybody needs a place to live more than ever. And so it's really, really a good investment if you're looking to put some money in where you can grow exponentially.
Absolutely. And to find a key resource, the key realtor like yourself, when you know the market, is absolutely important because you, Leo, you know more about what to find the right property versus somebody who's may not be as familiar with your domain, right? The area that you sell day in and day out. So that would be absolutely important.
Yeah, absolutely. And you just need somebody to help you along, answer all your questions so that you understand how it works and you understand the process of purchasing and the process of getting it rented out. And so, that's what we do. We help all our clients do that. And so it's not that you have to know every single thing and do everything yourself. So you just need somebody that you can trust. And if you, want me to help you, if you are thinking about somewhere cheaper to be able to invest in Dallas, then of course I would direct you to Radhi. She's obviously an expert and has already done it. You can see the results.
And I want to really stress on this final quote that is so important, and I get inspired by this daily, is that entrepreneurs should always aim to play the long game. Instant gratification cannot build a legacy. And I think that's something we need to keep in mind.
Yeah, it's a great quote. Do you know who said it?
Oh, no, I did not.
Yeah, no, you don't have to, but I was just curious.
So one of the, wealth building books or something like that.
Yeah, awesome. Okay. So that was wonderful. Thank you so much. I think everybody would really benefit from being able to see the numbers broken down and what kind of exponential growth you can have. And honestly, nowadays $50,000 is really doable for a lot of people. You just have to have some discipline, have some diligence, and if you guys out there who are watching are having a hard time managing money, learning how to save, or calculating what's coming in, what's going out, and having a budget and things like that, I have great financial advisors and consultants and planners that would happily help you with almost no money. Like, it wouldn't cost you anything. Like, they're just there to help. And if there's something that you actually want to invest in, then that's where they can make the money. So don't be shy and don't be afraid to ask for help, because there's so many free services that you can know how to use and learn how to do right away. So, and of course, Radhi's always available. If you guys want to get a hold of her, I've got, she's obviously here on Facebook. You guys can reach out to her by DM. You can reach out to me also if you can find it, and I can direct you to her. And so, lastly, I want to go over, as a tradition of our show, is that we always ask our guests what they love about where they live. So tell us, Radhi.
Oh my gosh, the convenience of living in the Dallas-Fort Worth Metroplex and the standard of living that we have, it beats every place. We don't have the beautiful scenery like you do, but it's easy to live here. So love that.
Yeah. And you've lived there almost
30 plus years, I
30
think.
plus years. Okay.
That's
Yeah. So, and you've raised your family there, obviously, and you're happy there, and everything's great, and you're serving all of your neighbors and all of your people that live in the area. So that's super great. Yeah. Okay. Well, great. Thank you. I just want to say thank you, Radhi, for coming on and taking the time. I know how busy you are, and sharing, this little bit of really important wisdom that an experience that you've gone through. And can you imagine if 9 out of 10 people did this, they would be more secure, especially nowadays with how things are. Market being so volatile on the stock market, and just overall economic, conditions and stuff like that. And this certainly, would give you a lot more security about your wealth building, and then for your kids as well. So,
absolutely. I hope I was able to be of help.
Yeah, thank you so much.
If you enjoyed this podcast, make sure that you subscribe to receive notifications of all new episodes, and please give us a positive review. And if you want to hang out with us live, check out our YouTube channel, where you can continue the conversations with me and our guests.